Our stock portfolio is currently down 10% year to date, and we're totally fine. I'm just kidding, we really are fine, and I think it goes to show with everything happening in the world, including the war in Ukraine, there are bigger things to worry about than our portfolio being down, and I consider myself lucky to live in a country that isn't going through war. So why has the stock market gone down? I would like to start off by saying that this is not the first stock market crash that we've ever been through, and it probably won't be the last. There have been quite a few stock market crashes in the past few decades. From the year 2000 to 2002, there was the dot-com bubble. People at the time weren't doing a whole lot of due diligence in the companies that they were investing in. All they really cared about was whether or not they were internet companies. Wow, a new internet company with no revenue and no product? Sounds like an amazing opportunity. Let's buy it. In 2008, there was the financial crisis, which was driven by subprime mortgage loans, which created a housing bubble in the US. Did you just use the term subprime? Yes, I did, because I watched the movie The Big Short. And in 2020, there was a stock market crash, which was caused by the global pandemic, which we are unfortunately still living with today. Even though each of these periods did look really bleak at the time, they still managed to recover higher than their previous highs. So what's going on in 2022? There are a combination of factors which are affecting the stock market at the moment. The first one is that less people are liking my videos, so make sure you give this video a like so we can pump up the Invest with Queenie stock. I'm just kidding, but here are the combination of factors. One of the factors is that inflation is reaching a record high in the US and all around the world. Another factor is the Federal Reserve is printing a lot of money. And this is how the Federal Queenie Reserve prints money. You simply copy and paste some money in a Word doc, and then you can remove it like this. And that's how we make more money. The Russia and Ukraine war is also a contributing factor. And there are also interest rate rises which are expected to happen this year, which generally means that asset prices across the board drop lower. And we can see from this graph of the S&P 500's PE ratio is that it has come down quite a lot from previous highs. The PE ratio is the price to earnings ratio, and it is a general measure of how expensive a stock is. After the stock market recovered from the 2020 pandemic crash, some tech stocks became really expensive and had really high PE ratios. And generally when PE ratios start to run really high and get really expensive, this generally means that a correction will take place, which will bring the value of the stocks down back to its intrinsic value. As we can see from this fear and greed index, the stock market is looking pretty fearful at the moment. And all of these uncertainties and fears are some of the reasons why the stock market has dropped. But there is a famous quote from Warren Buffett which I just love, which is to be fearful when others are greedy and greedy when others are fearful. Damn, the stock market's just so expensive right now. I kind of wish there was a crash so then I could buy the dip.
Many months later.
Buy the dip? But what if the dip keeps dipping? Our portfolio is currently down 10% this year and it's only March. Some of the biggest losers in our portfolio are our individual stocks including Facebook, Beyond Meat, HubSpot, Nike, and Tesla. Our portfolio of ETFs isn't doing great either, but it is cushioning some of the blow of some of our individual stocks. And that is one of the reasons why I think it's important to diversify my portfolio and to invest mostly in ETFs that are generally less risky than picking individual stocks. So this is what we will be doing, investing consistently and sticking with our plan. We've essentially put our investing on autopilot by setting up an auto invest portfolio with Pearler, which is the platform that we use to invest. Having our investing strategy automated is really helpful for us because it can ensure that we are dollar cost averaging into the market and staying rational and sticking with our plan no matter what the market is doing. And by the way, if you would like to check out Pearler for yourself, I do have an affiliate link down in my description below. If you sign up with my link, then you'll get 2 free brokerage credits. By buying into our ETFs and dollar cost averaging no matter what the market is doing, we are essentially not timing the market. We are trying to get the average returns of the market. As we can see here, in 2008, Warren Buffett issued a challenge to the hedge fund industry, which in his view charged exorbitant fees that the fund's performances couldn't justify. Warren Buffett's hypothesis was that, including fees, costs, and expenses, an S&P 500 index fund would outperform a hand-picked portfolio of hedge funds over 10 years. Warren Buffett did this competition against the hedge funds, and he actually won. which means that an S&P 500 index fund actually outperformed all of these big money managers and hedge funds over a 10-year period. And I think this competition really goes to show that there is a lot of value in dollar cost averaging into passive index funds or passive ETFs. And that is one of the reasons why this is one of my strategies when it comes to investing. Fidelity also did a famous study, and they found that their best investors were actually people who were dead or lost the passwords to their account. And one of the reasons why these people were actually their best investors is because they couldn't panic during a downturn and get swept up in the emotional roller coaster of the stock market. So those are some of the reasons why we are just sticking to our investing plan and executing on our strategy, no matter what the market is doing, even though it does look really fearful and turbulent at the moment. We are also protecting our energy. I think it's really easy to feel down right now with the war happening in Ukraine, the stock market crash, the flooding, and people potentially talking about a recession. It seems like all of the news that we've been hearing lately is negative. So remember to protect your energy, whether that be limiting your screen time or distancing yourself from toxic people and situations that don't serve you.
What's that?
I'm blessing you
Blessing me for what?
for wealth and riches.
Great. Free money.
We are also investing in our business to try and increase our income. We're doing this by buying newer and better equipment. We've bought equipment to launch a podcast and also hiring people to make our content better. Hopefully these investments in our business will pay off in the future and hopefully generate some more income for us. We are also keeping in mind that we are long-term investors. The stock market goes through ups and downs, and not every year will give us a positive return. But if we look at the historical returns from the stock market over the past 100 years, there are more positive years than negative years. So it is important to keep a long-term view when we are investing in the stock market. We are also trying to focus on the things that we can control rather than the things that we can't control. We can't control what's happening in the world, and we can't control the market, but we absolutely can control how we react to it, and we choose to stay the course no matter what's happening in the world. I've been feeling pretty down lately, and if you are too, you're definitely not alone. So we shouldn't be so hard on ourselves, and we should cut ourselves some slack. A book I've read recently is Your Head is a Houseboat by Struthless, and a point that really resonated with me is the concept of an inner child. We all have an inner child inside of us, so when we say mean things to ourselves, it really just does hurt ourselves because we do have that inner child inside us listening to every mean comment that we say to ourselves. So if you wouldn't say those mean comments to a 5-year-old version of ourselves, then why are we saying that to ourselves? Haha, you loser, what's wrong with you? You can't even write the alphabet. Why are you being so mean to me? I'm only 5. And lastly, we are not comparing ourselves to other people on social media. Some people only show the gains in their portfolios, but they don't show the losses as well. So don't compare yourselves to people on social media because you may not be getting the full story. Pablo, you need to do your special part for the secret code. Yeah? Thanks so much, Pablo, for giving us the secret code. So write us a comment below with the word happy in it, just so we know who watched this video all the way through. And don't forget to give this video a like.
Thank you. See ya.
Bye.